Let's see if you guys can see me. I'll introduce myself here as we hit the ground running. Oh, who's that guy? It's me. Hey, everybody. How are you? It's good to be here this afternoon with you. I'm glad that you were able to make some time here today. Over the next 45 minutes or so, we're going to cover some pretty interesting stuff. So um, if you have any questions, please feel free to, as they come to you, type them into your room. It's an interactive webinar. I want to hear what is gelling with you and what I might have maybe overlooked or glanced over. And if you're a customer, you're having success, you're doing great, you have a story you want to share, please let me know that too. I'll let everybody else know. We'll kind of celebrate with you guys together. Happens regularly each week. Somebody shares some great news, and it's always great to hear back from you. I am located in the third story attic bunker here of the North Carolina homestead, about 40 minutes west of Winston-Salem. No, 15 minutes west of Winston-Salem, about 40 miles south of Virginia, about an hour north of Charlotte. Been here about 16 years, born and raised in Long Island, New York. Moved down 16 years ago to escape the rat race. Got tired of terrorists targeting things that were a half hour from my house. Godzilla never seems to attack a farm in North Carolina. And so we decided to live where Godzilla wasn't coming. And so we're down here, and I've been running the company now here, founded about 15 years ago, and just having a blast. Let's get started here. Thanks again for coming, and let's go. So we have a very unique offering. If you're new to us, those of you that have been here for a while, you sort of know the spiel. We are the predictive time company, and you'll see every once in a while some oddball Facebook post from some guy in a Himalayan cave somewhere about how he's got a chart that shows how awesome his predictions are. But we're the only company, as far as I know, in the last 15 years that gives customers the signals in advance before the webinar. And so for those of you that have been following along as new pilgrims, we've been just sort of giving out the forecasts in advance for the markets and challenging you, I guess, to follow along and see if what happened 2 days later is in fact what actually took place. And so how many of you have been following along with those times that we published a couple days ago? Anybody? Yeah? How did you do? Really? Well, that's great. Congratulations. A lot of you are saying you've been following along and doing quite well. Everything we do is sort of based on the idea that it's not entirely obvious that markets are predictable. Thomas says, the guy that talks funny said a couple of weeks ago that if it's a buy time and it goes up, to sell it. That doesn't seem right to me. Thomas, he uses a system that involves Elliott waves, and while I don't particularly know about the specific instance of which you speak, Colin is a venerated trader of his own right that's been using the signals for years and years and years and years. So I'm not sure exactly what he said, but I'll go over what I look for here today and maybe give you a different perspective. How's that? Yeah, this is the page that had the forecasts on it, that those of you who followed along, not quite customers yet, we're going to reference and take a look at and see, in fact, what goes on. Works for me. That's pretty sweet. All right, hey, let me take care of something here real quick so that I fix something for us all next week. It looks like the links on this page didn't come up as hyperlinks. And I just want to let Rachel know next week to take care of that for me, if you would mind waiting just 1 second. Sweet. So I believe personally, and many of you who use the software have come to realize and learn that the guys that are running the show generally are 3 or 4 steps ahead of the rest of the retail trading world. We know that, for example, Peter Thiel, one of the largest investment funds in the world, pulled all of his money out of SVG before we found out that the bank was collapsing and JP Morgan swept in and bought it. We knew that, for example, Warren Buffett, during 2008 and 2009's market crash, when Goldman Sachs was selling at a brand new lowest price it had ever been, that there were rumors of mysterious trading, and Berkshire Hathaway swept up millions and millions of dollars worth of shares at the very bottom. And these guys seem to always know what's going to happen in advance, and the last people to figure out what's going on is us, usually too late. And so that information is there. They leave clues about what they're going to do, but if you don't know what you're looking at, like if I look at this QR code, I have no idea what that data is trying to tell me, but I know that it's information. There's information encoded in there. It's just a very complicated thing that I'm not visually trained to render. But if we apply a tool that's designed to search through the information and find the patterns, it could tell us, for example, that this QR code is a link for backtothefuturetrading.com, right? And so when you and I look at markets, we don't see things like time. We've been conditioned, in fact, by vendors who tell us that you need to use order flow, or you need to use the volume weighted moving average, the VWAP, or you have to use this or that or the other thing, or their special proprietary support and resistance levels, which work when they post things online and then stop working once you buy the software, right? The whole rigmarole of the trading education community is akin to the gold rush, where most of the people making money were the people selling gold shovels and picks and pans, right? Very few people found the gold. And I wanted to explore some things with you to kind of give you a sense of why I believe markets are predictable. And then I want to go through a couple things with you and show you some examples of markets that we target, including the E-mini S&P. We'll compare what we were expecting to see today and yesterday with what actually took place. And we'll apply a simple rules-based trading system to those things to get a feeling or an understanding of whether or not those signals bear any kind of importance. We'll look at stocks like Tesla and Amazon, Meta and Apple, and get a sense for how predictable they are, right? But first I want to start with something unusual and explain to you a little bit about how I view and interpret time. time for me, and software handles all of this. Now you don't have to do what I've done here by hand. Predictive time. Let me blow this up so we can see it better. Predictive time signals are a series of upcoming, can't spell, words are hard, upcoming buying and selling times with a language of patterns defining the expectation at that time. Predictive time signals have two components. They have the upcoming buying and selling times, right? We know when the buying times are coming, and we know when the selling times are coming. And then tagged alongside of that are these patterns that are coupled to it, sort of interpretations that tell us what to expect at those times. And most of the time it's pretty normal. About 70% of the time when there's a buying signal coming or a selling signal coming, it does what we expect it to do. But about 30% of the time, there are patterns that kick in that sort of define what we're expecting. For example, on this crude oil, the pattern will begin forming bala on the open of the candle if it qualifies. So if a pattern 5 is forming mid-candle, it'll actually show up on the warp screen. Yeah. Let's take a look at this chart. And in your handout section of the webinar stuff, there's a guidebook called the Histogram Guidebook V3. I've had this thing attached to the webinar now for, gosh, 6 years. And I want to show you that most of the time when we arrive at a buying pattern signal, for example, when we arrive at any of these white dots in the future, we expect it to go up like these green dots do, right? So when we arrive at a buying time in the future, if we arrive today at 7:21, 9:24, 10:36, these were all the buying times for the ES today. We sort of expect an upward movement out and away towards the top of the chart from that signal candle. That's pretty normal. And then conversely, when we arrive at a selling pressure signal, in this instance, the E-mini S&P 3-minute chart, 8:21, 9:42, 11:09, 11:36, and so on. Any of these selling pressure signals were times that we were expecting selling pressure, the market pushing away down towards the bottom of the chart, away from that signal candle. And these times represent, historically, every time the market is being pushed up or down over and over again in the last several thousand bars. So let's say in the oil futures market, every day at 10 o'clock Eastern, the market falls 100 ticks. Tomorrow on your warp chart, on your indicator, it would tell you before we got anywhere close to 10 o'clock to expect a selling pressure signal at 10 o'clock. The software is intercepting those behavior patterns and sort of warning us about it in the future. Well, when we get to those selling pressure warnings, we usually see it drop. Now, over the years, I started to uncover some stuff. And number one, I started to notice something called an inversion pattern. For example, when we arrive at a selling pressure time or a selling signal candle, and either that candle, the candle to the left or the right of that signal, are brand new structural lows, meaning candle 1, 2, or 3, their low equals or exceeds the prior swing, an unusual thing would happen, Bala. It would reverse and go in the other direction. If even for a short time, it would usually push up. And this is called an inversion pattern, a backwards pattern. Positive turns to negative, negative turns to positive, cats start marrying dogs, it's chaos. But it's a very mechanical definition. And when we see that take place, we have an understanding that even though it's red, it's sort of an oversold red. In our case, it would be blue. So if any one of these blue signals, for example, the 318 candle or the 1109 candle, if that was a brand new low, the software will tell us, hey, expect this thing to push back up. Now, same thing holds true for a buying signal at a brand new high. Again, we're talking about how predictive time signals work. And a lot of companies come close, but they absolutely miss it. When we arrive at a buying pressure signal, one of those times where we were expecting the market to go up, if that candle's high or the candle to the left of it broke the prior swing, then we expect it to sort of curl over and reverse and go down. It's kind of weird, but it's like an overbought time signal, an OBT. The polarity shifts, and instead of being a green dot, we sort of treat it like a red. Or in our instance, instead of a white signal, we treat it like a blue. So intermixed with our time signals, when we arrive at those, it tends to do this. Yeah, a 5 is an inversion of a 1, and a 4 is an inversion of a 2. Yep, and there's examples of other patterns here in the book that we can look at, a pattern 7 and a pattern 6. We're up to 8 and 9 now, but I wanted to show you something really cool. I tend to look at weird stuff. I find the really good stuff for trading is in the belly of the weirdness. I went and I took all of the signals for the last year. Everywhere, for example, you see a large green dot on my chart is a full moon. And everywhere you see a large red dot on my chart is a new moon. And you can go on Google and you can look up these dates and you can put these signals on your own chart to verify that what I'm telling you is true. Mbala, everywhere that one of the new moons, which is a selling signal on oil futures, didn't meet the criteria for a pattern 4, I just put the number 2 right there. Does that make sense? So in this section of the market, if you go back and reference that book, it doesn't meet the requirement of of a 4 or a 5. Mbala, do you see how this signal and this signal and this signal and this signal and so forth are behaving just like they did in the book that I wrote 6 years ago? They're not a brand new low, they're not a brand new high, and they kind of reverse and go up and down predictively. We know when the lunar signals are coming for the next 100 years to the second. We know when the moon will be its fullest and its newest. We know when the next signals are coming. But now, check this out. When I went back and I filled in the 4s and 5s, some really cool stuff started happening. Look at where the pattern 4 was on September 26th. Look at where the pattern 5 was for October 7th of last year. Look at where the pattern 5 was for November 4th of last year. This just qualified to be a pattern 5, broke this high by a few ticks, and this qualified as a pattern 5, right? Now, just underneath that was a pattern 4. And now up here, we currently have a pattern 5 off the full moon. There's some new patterns here that I don't want to get into. One's called a pattern 9, and there was a pattern 9 here and here. And what's amazing to me is, with rare exceptions, like this little doodad right here, most of the signals go immediately in the direction that we're expecting. So when you look at this chart with me, it's sort of hard to explain this away. I get into arguments with people on Facebook trading groups every day about this. Every day. Yeah, it didn't really continue to go down here, but it stalled for 1, 2, 3, 4 days and didn't go up anymore. And so we have a pretty good idea of what the direction of one of the largest and most frequently traded markets in the world is going to do predictively. No, I'm still here. Sometimes I just like to stare at the chart. There's another example of this, guys. For example, if we look at Apple, and it's right here for all of us to see, for all of us to observe and do stuff with. If we take Apple as a stock and we ask, how predictable is it? The first thing I'll do is I'll put a 50-period moving average on it, right? Everyone watches the 50. We'll put a 20-period on it too. Why not? That's the one everybody's trading. We'll put that off there. And then I'm going to come in and put that same lunar signal. Very simple, right? There's not much to it. It's just moon phases. And often there's this great Bible verse, if you believe in such things, that says God uses the foolish things to confound the wise. You ever hear that verse? He uses the foolish things to confound the wise. These are silly things that you and I are talking about, right? At least I think they are on the surface. They shouldn't make much sense. And yet, on this chart, we're looking at a first quarter lunar phase, and a third quarter lunar phase. So that's a moon half full and a moon half empty. And those of you that trade different stocks, an unusual thing starts to take place that I've discovered. We can look at stocks using one of 3 different methods without the software I'm about to show you. This isn't even proprietary stuff. This is just the size of the moon in the sky. We can look at the quarters of the moon. We can look at the apogee and perigee of the moon, the distance to the Earth. We can look at a chart that's related to the sunspots and when the max and mins of those occur. And Bala, I have found that certain stocks really respond to quarters 1 and 3, and other stocks and markets respond to quarters 2 and 4. And if neither of those work, the apogee and perigee is pretty much spot on. You want to see an example of that? And again, this is all just kind of demonstrating how predictive markets are and how no one pays attention to it because it sounds silly. We'll take a look at an apogee and perigee example, sure. But in this instance, here's what I want to go over with you. And it really is, it's sort of like a little ATM machine if you're paying attention. I set the distance of the dot to the candle at about 1.5 ATR values away, right? And in an uptrend, we're looking for opportunities to do what? To purchase. When is the next leg up going to be? And so in this very real instance, every one of these green dots represents a buying opportunity. And we'll just put a little line underneath all those candles. And so guys like William Delbert Gann, for example, they were looking at signals like this with an edge, right? They were saying, hey, I understand something about how the universe works, how humanity is tied psychologically and physiologically to something as innocuous, seemingly innocuous as a lunar phase. And Bala, you'll see that it's almost like a song with a certain meter or a certain rhythm, right? Like you can almost hear it. Buy, sell, buy, sell, buy, sell, right? And so if we're looking at it, you can see where the market sort of comes, the downtrend stops, right? 1, 2, 3, 4, 5 candles hovering over this sort of first quarter phase down here. And then it's just a matter of getting in and getting out, getting in and getting out. If you trade options, time is the most important thing, right? You want to get in there and get in the money quick. And so in these instances, you can see it sort of immediately erupts up at the first quarter phase. And we know when to get out. And here we're actually under where we started, but it went up 3 or 4 candles, a total of $3, which is sort of the minimum of everything it's done along the way. The next phase 3 is in 4 days. So this is just the first quarter and the third quarter. And what's cool about it, again, is that in the corner of the screen, the software is telling me when the next thing is coming and in how many days and hours before we get there. All right, so this idea of markets being predictive is not outlandish or outrageous. In fact, when I post these charts in the forums and on the Facebook pages, I'm made to feel like a leper. I'm made to feel excluded. I'm an outcast. And yet when I give them the definitions and I show them what's expected, I think someone will carry me off on their shoulders, Thomas, and there'll be a parade for me. I'll have indicators named after me. I'll be invited to demonstrate for the platform and all of the traders, and no one ever comes. No one ever invites me. And so you guys are here. So I've learned that not only is that enough, it's a badge of honor to be here to speak to you about this. So let's take a look at another example of this with a market like Tesla, which doesn't respond as well to the lunar phases. However, It does, however, respond very well to something else. And I wanted to share that with you too, just as a means of reinforcing what it is I'm about to share with you. Let's say instead of that, we'll do 2000. Does that work? We'll do that. I'm trying to approximate how much 1.5 ATR values is. Okay, we'll do 1,000 and 1,000. How's that? That's pretty good. Actually, let's go 1,500. It's a little too close. I want to have it about 1.5 bars away, these signals. All right, that's cool. So now what I'll do is let's change the color of the candles just so they're not so interfering. For a down candle, we'll make it just like the other one, dark gray. And then for an up candle, we'll make it cyan. How about that? There we go. So these are all indicators right now in the force tool. And this one is based upon the apogee and perigee of the moon. So again, we're trying to decide, are markets predictive or are they not predictive? And so Bala, the way this works, if the moon has any influence on us at all, then it should stand to reason the closer it is to us, the more of an effect it has, right? At least that was my theory. Well, if it has a big effect, then it should have a bigger effect when it's closest to us. And so the indicator that I'm showing you here puts a signal when the moon is farthest away from us, and then it puts a signal when the moon is closest to us. Doug, does that make sense? So over here, for example, there's less of an effect. And then over here, there's more of an effect. Now, Bala, check it out. If I apply that to the Tesla market, right, and we put those same sort of indicators on there, the moving averages, it becomes its own little trading system, doesn't it? So on this chart, I think I'm doing this right. Apogee and perigee, apogee and perigee, apogee and perigee. Bala, how predictive is Tesla using the distance of the moon to the Earth with those same signals? What do you guys think of that? I go through webinars really quickly sometimes, and I forget how beautiful and wondrous the world around us is. I forget that you guys don't know the craziness in my head, and sometimes it's okay to pause and look at the beautiful things together. We're going to look at the software here in a minute, but I wanted you to see when we're below the moving averages, we're looking for puts and shorts. When we're above the moving averages, we're looking for longs and calls, right? And so if we have our stop levels here, a trading system begins to emerge, doesn't it? At least I think it does. And it explains what we're going to look at with these other markets here in a moment on the intraday levels, because there's so many opportunities once you begin to realize that institutions know all of this stuff, right? I got to get Ron to update this so it draws all these things in. I use this tool all the time to kind of demonstrate to people how this works. Is everybody with me so far? Okay. So Bala, when, in my opinion, when you have these sort of double tops and there's consolidation areas and the risk is very low, and you'll see it on a lower time frame like a 4-hour or even a 1-hour chart, and you're sitting on top of a signal that you know historically tends to drive the instrument lower, take a counter trend trade. Use very low risk, super tight. For me, I'm waiting for it to close under the moving average because now it's a trend entry. So in this instance, this is where the calls would change to puts and I would be short. But now I have a window of time. I know that from the fact that it's predictive. I have until this next day, October 5th, for that signal to arrive. And so if you're playing with options and you're looking for something that's time-based, right? All of this garbage that's available, all of it is so price action lagging indicator. I saw a lady advertise an RSI system the other day. Have you seen these ads from this lady? She used to have a book. Now she's got an e-course. I'm like, who uses RSI anymore? Like my dad did. It's like when Matthew McConaughey is doing Lincoln commercials. And he's driving down the road. And I'm sitting there thinking, who the hell? He's trying to look all serious and cool. I'm driving around in a car that my grandfather used to drive, and my dad really loved it. And I'm hoping you think it's cool too. I don't buy one because they pay me to. I buy it because I like it. No, you don't. No, you don't. Stop it. Yeah. And so there's this whole other world where things start to get simpler. I'm not interpreting as the RSI under 20 as their divergences, or I studied RSI, right? That was how we all got started. And now with Tesla, here's what I know. If I'm under the moving average, Bala, I'm going to short it. And I have a window of time that extends from that signal to the next signal. I'm not sure what expiration I would select. Options is not really my forte. But if you know somebody whose forte it is, this is super powerful, right? You can ask them. Take a screenshot of this. In fact, let me grab one for you. And maybe you could ask somebody, hey, what do I do with these? Bala, there's a second place that I would either allow the option to continue or the trade to continue or get back in. And I want to show you that here real quick. Let me take a screen capture there. And then we're going to go look at something that's even cooler, I think, for the software. So there's the screenshot in your chat box. Do you see it there? When the market is falling, there's a few things that I'm looking for, right? Number one, those signals. Number two, when the signal falls through the stop line of the counter trend signal. So if there's a buy time here and they're supposed to buy, and Bala, they continue to drop, when they breach that level, it tells me that the selling is so feverish, so fervent that it's overriding that physiological, psychological component, right? It's like you pop your leg with a shot of Wegovy. You're supposed to have no appetite, and then you wake up and you're on a Stephen Tucci Exploring Italy TV show on CNN, and someone plops a plate of rigatoni with fresh mozzarella on the plate. The Wegovy ain't gonna stop you. The Wegovy is gone. You've sweat the Wegovy out of your system, and you are 2 plates of macaroni in before you even realize you're close to full. So when you breach this level, there's something catastrophic happening, a black swan type event, and they happen frequently. So this now becomes an opportunity for a put, because the buying that was supposed to occur, the profit taking that was supposed to take place hasn't, or it was very sporadic and short-lived. Does that make sense? And that happened again right here in Tesla, right when it breached that line. So you had 1, 2, 3, 4, 5, 6, 7 opportunities. And then Bala, it finishes higher than it started right here. Now, here's a fun fact. And this applies to the Warp software that we're going to look at here in a minute. If you have a selling pressure signal that's based on time, Bala, we would expect, and then you know when the next buying signal is coming, right? It's over here. You know how many days and hours until we get there, right? So that is coming. And now Bala, we're expecting it to do this, right? We want it to stop, kind of maybe even come up, but finish lower than it started. Would that be a good assessment of what we're expecting? We want it to finish lower than it started. What if it finishes higher than it started? Doug, what do you think? Mike, what happens if the candle, it finishes up here on the close? What is that telling you maybe about the trend? If it finishes higher than it started, trend's probably going to reverse. If you're a Warp customer, this is the basis for the predictive trend. If you have Warp and you're using the predictive trend, that's exactly where the signal comes from. So right here, when we kind of burst through that red line just before that full moon signal, this is how I knew when Tesla was about to reverse. Right here, when it gaps up above that red line, you can treat that now using the distance of the moon to the earth as a trend reversal. Now you're looking for what? You're looking for a call here, here, here. You're under the moving average here, so no. You creep back above it here, and here, and here. And then Bali, do you see the puncture right there? There's another put right there. The predictive trend was down. So over here, if we follow that same logic, over here it was telling us that the trend had reversed. And then Bala, it crosses, Doug, it crosses back above and punctures that red line again right there. So there's another predictive trend entry. And look where we're sitting right now. This is a 20 and a 50, Bala. A lot of people look at a 20, a 50, and a 200. Yeah. So here's what I want to ask you guys. If this is known, Why aren't we using it every day? If a stock responds this well to those signals, how come when I go to the websites, I don't see any mention of that anywhere? Apple beats soft expectations. Really? You don't say. They beat the expectations. Huh. I don't know, Bala. Really? Oil report, natural gas report. Really? Okay. And these things are never mentioned. And here's what I kind of know for a fact. The people who control the markets are 100% aware of this correlation, of this, I dare say, causation. The original financier to the nations, the richest man on the planet, arguably JP Morgan, the wealth they've consolidated, the banks that they've purchased, one of the largest financial juggernauts in the world, right? You got BlackRock out there, but JP's still chugging along. And the very first one, he knew how this stuff worked. He knew how people responded. And yet no one believed him when he said what they were doing. So what's going on with warp? All right, how is warp different from the lunar predictions? We sort of decided, this is a great image that I like to use. Imagine there's this aquifer, underground reservoir of water. And this is what drives the market. And I personally believe it's based on time. Gann believed that it was time. A lot of people who studied Gann figured out the same thing. If time is the fundamental force, right? If we come up here, if time is the most important factor that's driving markets, think of it like the lifeblood. We need water on the planet to survive, right? There are a couple ways we can pull that information out. So what I just did with the lunar stuff is I've horizontally fracked into the reservoir of time. All right, I'm going to put the word lunar over here. That stuff's great for larger moves that last a day to a week. I'm sorry, a week to 2 weeks. All right, that's one way to tap into it. The dark pool, yes. You made me think of that movie I was a big fan of when I was a kid called The Dark Crystal with Jim Henson, who I miss dearly. One of the great minds, right? When these guys pass, when the Fred Rogers of the world disappear and the Jim Hensons disappear and the Robin Williams of the world leave us, I feel like it leaves a really dark hole behind. But Bala, what warp does is it says, hey, I'm going to lower a bucket. I'm going to lower a bucket into this reservoir of time. And I'm going to pull up these predictions. And the bucket's got a few holes in it. It's not the absolute. I saw, yeah, with Pee Wee. The session is recording, yeah. And so what warp does is it presumes that these time cycles exist and that banks are following them, and the moves that we see every week are directly resulted to them. And so the way I have the webinar forecasts set up, the ones that Rachel publishes for you guys to follow along and trial each week to make sure we're being honest with you. They're based on a very specific method called data mining. And what Warp does differently for intraday signals, especially, let's say today is Thursday, right? Yeah, let's use a different color. I've asked the program to go back 2 weeks in the past. 2 weeks in the past. And Stephen, I've said, hey, look at when the S&P E-mini has gone up and down last Thursday. Look at when the S&P E-mini has gone up and down 2 Thursdays ago. And as of the close of the market last Thursday, the computer takes all this data and it looks and sees when is the market going up or down regularly lately. And it's able to produce a histogram for us that we're in turn able to email out to you and send out. So it says, look, I dipped the bucket in the well. We noticed some stuff floating in the water. Because of what happened this Thursday and 2 Thursdays ago, we're pretty confident that the selling times for the following Thursday are these, and the buying times for the following Thursday are these. So Thomas, as a result, I already know what the behavior times are for tomorrow. I already know what the behavior times are for Monday, Tuesday, Wednesday, and now Thursday of next week, using this very novel approach. I already know because the last 2 Fridays are in, the last 2 Mondays are in, the last 2 Tuesdays are in, the last 2 Wednesdays, and now the last 2 Thursdays are in. So we already have the forecast times for Friday, Monday, Tuesday, Wednesday, and Thursday of next week. That's pretty cool, right? So Warp uses a method that allows us to go back in time, find the ripples of these time cycles, take note of them, and project them forward. So when you look at my indicators, I'm using a very specific setting for all of these, with rare exception, for all of these charts. I'm telling the software to go back 7 days and 14 days. So Thomas, if that's the case, how far in advance do we know when the signals on this chart were coming? Based on my explanation, how far in advance do I know, do you know, do customers know? Yeah, a week. So here's the cool thing with Warp. About half the time, when we project those behavior patterns forward, you'll notice, Bala, they're coming in near the exact high and the exact low, right? When you get there, it either shoots straight up or straight down. And I've been publishing these 60-minute signals on the E-mini S&P Facebook pages that I'm a member of, right? It either shoots straight up or straight down. And now look what we're coming into as of the close today. And it's telling me all clear through lunchtime on Monday of next week. Sunday night into Monday afternoon Eastern time. So all of these signals were forecasted a week into the future. I already know at 10 o'clock on August 8th, 10 a.m. until 3 p.m. 4 o'clock on Monday afternoon into 10 p.m. Monday night, Eastern time, GMT -4. Any questions so far? Using that same analysis now, I can get even more information about markets like Apple or a market like Meta. And so if I look at Meta, now Bala, check it out. I can come in here and tell the software, tell me about those inversion patterns. And Bala, do you see on this chart where they're kicking in? Right here. The program, because it's a mechanical rule, alerts us to where those moments are. And then over here, you can see where the free and clear pattern ones are using that look back. So here's a free and clear pattern one on May 5th. We're coming up to another one on August 8th. The hollow circles are a way of trading with the signal that I want to go over with you here. So for example, if we arrive at a pattern 5, Bala, normally I want to buy right here, right? I want to buy at this signal. It's a buy signal. And my stop is 1.5 ATR values away from the low of that candle, right? I put the hollow dot there, 1.5 ATR values above me. And what I'll do is I'll trade a breakout of that upper level, just like we would trade the breakout of a blue line. So Bala, I approach this signal the same way I approach that entry right there. Does that make sense? It has to go through this line before I'll trade it, because I know what happens when those 5s get here. I know that it has a tendency to do this. So when we arrive at those inversion patterns, there's a second element involved. It's like showing up for a date and the girl has her best friend there. And you go, oh, I got to impress 2 women now. I had the first one figured out. I don't know what this one likes, if she's into German opera or she likes Adam Sandler movies. I better be careful. I better watch what I say, confirm everything, right? And so with pattern 5s, those hollow dots appear the same stop distance away above me. And in the book, you'll see I actually give instructions about how to trade those as breakouts. Very good, Earl. And so on this chart, Bala, you'll see I don't start getting long until I break that dot, which is almost at the end of that sequence. Does that make sense? And so over here, same thing. It's a pattern 5. I don't want to get long in Meta until it breaks through that dot. When you go into Warp, you're going to deactivate this box that says show signal dots only. And if you deactivate it, the patterns will appear. You may need to go down into your signal accessory editor and under patterns, move the pattern text offset out a little bit. I think it's a 10 on default. It should be a bigger number. We'll go even further, 150. And when you do that, Bala, you should see the numbers. See how they're starting to emerge over here? I'll have Ron take a look at that. Maybe we can get that fixed. So now you can see the numbers appearing. Yep, otherwise they're kind of tucked in there. That's a little glitch. It's one of those things that's sort of slipped through the cracky cracks for years. What did he say? Cracky cracks? Are you okay, Michael? Blink if you need help. So yeah. So we have a sense of, check it out now, on Meta, when we come into the June 5th signal, we just have to refer back to the diagram. And look at how a 6-year-old book plays out on a current stock trade. The pattern 5 here occurs on the 3rd candle, just like the book. And if you don't want to use the dot, Bala, I put a line right over the high of that pattern 5 signal, and I trade it even closer. I wait for it to break out, and there's my call, right? So if you follow the guidebook, I even tell you how to trade it. Put your entry a couple ticks above the high of the highest high of the pattern and go long. So if we follow that rule, over here, look, there's the highest high. And now, Bala, we enter long with a call right there. Bala, we have automated a lot of this with the Optimus program, which is doing better and better every day, by the way. Oh, okay. So when we use warp, we're not dependent on the lunar signals anymore. And in fact, we can start to break things down into smaller and smaller time frames. So here's Meta now on a 60-minute chart. Right, Bala? So now, if I want to trade it intraday, I can't do that with the full moon. I can't do, I can teach you a course on that. It's not hard. That's what she said. But with warp, we're simply looking back 2 Thursdays, 2 Wednesdays, 2 Tuesdays, 2 Mondays. And now, you know, July 24th, we can see that we have a double bottom here with a stop run, and the banks know gosh darn well they're going to suck people into that low, and then they're going to reverse it and go right back up. That to me is the ultimate tragedy of this. The banks will come, break the high, and then they lure everybody in, and then they kind of ride it back down just when those signals arrive. And nobody believes this. Remember, the foolish things confounding the wise, and it just hurts my noggin. Right? Yeah, you can go down to as low as a 5-minute. Same thing. Meta on a 5-minute chart. All right, you can do the same thing if you're trading intraday. Here's Apple on a 5-minute chart. Whoops. My patterns are a little too far away. But Bala, you get the point, right? And so I can already see the signals coming up. 940 is a short tomorrow in Apple. It may be a pattern 4. Just like on a 5-minute chart, this was. So warp is a really cool way to get in here and analyze when these opportunities are available. So if you're a stock trader, for example, those are the places that we're looking for longs. Breaks of the line right here, another long right there, another long right here, and now the next one is August 16th. Well, what do I do between now and then? Nothing. you had a fake out right here, that would have been a stop. Your stop is right below that candle. Very small risk on that trade. And then Tesla, same thing. We saw the trend predictively reverse right here. As soon as it broke that line, Doug, right? It has broken that line again. All right, we'll use this white instead of the green before. And then up here, it's broken it again. So the uptrend is preserved. I would say, yeah, it looks like it ticked through it right there. So the trend reversed right here, and this is a trend continuation. So this next signal on August 8th, boy, that's pretty important, wouldn't you say? Yeah, I mean, we can look at NVIDIA, we can look at AMD, we can look at Microsoft. It's all the same stuff. Bala, did it get any less accurate when I just changed the instrument? No. On AMD, we punched the blue line last right here. So the trend is up as of right now. The next signal is August 7th. And look, we're at the bottom of a range. I wonder if they'll come back, retest that range, punch through the low, and then go up on the 7th. What do you think of that? Yeah, so over here, you had a call on AMD on the 23rd. You had one on the 22nd of February. You had a call right here on the 15th of March. You finished out of the money and you finished at a loss here by April 17th, and then gosh darn it, you were back in there April 27th, out on May 22nd, back in when it went through this price. You were here and you finished at a loss, and then you were here and finished at a gain, and now the next one is coming. Yeah, I mean, you know more about that than I do, Bala. And then Microsoft is just punching in. And it's calculating the information for you. There you go. And if you want to see those inversions, just take the button off. Boink. And now we know what to do. Microsoft, according to this, we're not looking for a long unless it violates this blue dot or until August 21st. Man, that was almost a pattern 5, wasn't it? Oh, just missed it. That's okay. NVIDIA, sure. Doink. Same thing, guys. Last one, and then we'll look at some futures. A call when it burst through the blue line. A call when it broke through the high right here. A call right here. A call right there. We have until May 24th. We're out. We're long if it breaks through 319.68, which it did. We're long, we're out and then in again by June 9th. Does not punch through the blue line, so we're long again on August 6th. And now July 6th. And the next signal, Bala, is July 4th or August 4th. Words are hard. And then there's no more signals until September 14th. So This is a really long span of time for a trend to develop. Where might they pull back to, right? So you can start to look here and say, huh, there's a little bit of a trend line right here where that might occur, right? Anticipate now where these guys might take it if the banks are in fact driving it. You also have another support level here from that swing high. You have another support level here. So Bala, anywhere in this range between now and the 4th, good opportunity, right? To try. So one of the ways that we use to prove that this is working is to give you the times in advance and then sort of analyze what we would have done with it. Here's the signals for Wednesday. So we published those times for Wednesday and Thursday because nobody believes us when we tell them things are going to happen. So for Wednesday, for the E-mini S&P, these were the times that we were told to look for the moves, right? And so if we compare those to what actually took place, now we've got a sense of where we might have gone long and short. All right, so US session, all right, we'll keep it simple. Where's 930? 930 is right there. So Bala, I would go short right here on the puncture. If I did, the market goes almost $250 in my direction before reversing. All right, so there's a break-even trade. Then at 957, Bala, just like the lunar chart, right? Just like the meta chart and the NVIDIA chart we looked at, what would we do intraday? It's a pattern 2, it's not a pattern 4. What do pattern 2s usually do? Right? Well, it's in a book. If it's a plain Jane pattern 2, most of the time, it usually does this. And so we gave that time out on Tuesday for Wednesday, a day in advance. And so here we come after the open at 9:57. It's a pattern 2. We look at the book. The book says, hey, I know what you're thinking about doing. And where do we enter short? On the close of that candle right there. Where's our stop? Well, my stop is 1.5 average true range values away. Now you can set that to be further away, you can set it to be closer, but generally speaking, a 1.5 is a pretty good stop level. And the ATR, average true range, is dynamic. As the market slows down and the volatility decreases, your risk decreases, but your potential reward decreases too, right? As the market speeds up and the volatility increases and the moves are bigger, your risk increases, right? So you don't need airbags if cars go 15 miles an hour. You go 1,500 miles an hour on an airplane or a fighter jet. Is that even possible? I think so. Maybe. Now I have to look it up. What is the fastest plane speed? 4,500 miles per hour. the Blackbird, the X15. So we're going to short it. Now, here's the beauty of the tool, just like we were looking at earlier. I know how long the trade has before I enter it. I know the expiration date of the milk before I buy it. How many of you go to the grocery store and you look on the container and you see that the grocery stores put the milk that's about to expire in the front, right? You're like, I'm not going to buy that. It's going to smell funny in a day or two. And then you reach around back and you get the milk that's going to expire later. Well, the indicator tells you how long you have for the trade to work. So Bala, contrary to the funny sounding guy who has a good system on his own, you should listen to some things he says. But for me, I'm going to enter short right here, and I'm going to hold it until 11 o'clock. And that's a $23 move, or a little over $1,000 per contract. Now that's based all on information that was available before this market opened, right? It was based on information that was available before the market opened. Now that's what makes us different. And I have arguments with people who say, well, I'm in a chat group, I'm in a Discord, I'm currently using twisty trades or twist purple nurple trades, whatever they're following. And I'm like, but you don't know what's going to happen until it happens. I have a nasty habit. It's not good for my marriage, but I think it's kind of funny. There's a guy who's got a wife and he scares her. He stands behind doors that he knows she's coming and he'll go, ah! And you can see she's paralyzed by this guy. And yet she stays married to him. She makes the funniest faces. I think he should be convicted for terrorist charges. I have done this to my wife. I will stand by a closed door that she's in a bathroom of, and I'll wait 20 minutes, Bala, with my nose by the door. And as soon as she opens it, I go, oh. That's what trading is like without this tool. I don't know how people trade without this tool anymore. How do you sit there and wonder when the signal is coming? People put these beautiful support and resistance levels, right? They have these lines and they're like, look how it bounced perfectly off of S6. I'm like, yeah, but what about S5, 4, and 3? The RSI curled up here and it made a hook and we got it. You're going to wait all day for a hook? Oh my God. So anyway, now Bala. Earl, there's a guy who's enlisted his daughter's help. That's a whole, I don't want to go down that road. Now, Bala, when you get to the counter trend signals, you don't have to use all this risk. You see what I'm getting at? So there are two approaches you can take. If you have a counter trend monkey on your back and you gotta trade it, I don't endorse this. I believe the most successful traders I've ever met were trend traders. But if you gotta do it, here's what I suggest. Use half the risk. You with me? Don't use this whole amount. Use this amount. That's lesson number one. Cut your risk in half. And then go for 2 amounts of that risk above you. So target 1 would be here for a 1-to-1 trade, and target 2 would be up here. So you can measure that move. And if you're going to trade with counter trend, make sure you're getting a 2-to-1 risk reward ratio. Does that make sense, Guy? You can apply the same concept to a pattern 4. So Bala, put the risk underneath the candle. Trade half of it counter trend. If that's going to be a reversal up, if the pattern 4 is going to behave the way we expect it to, right? Forgive me for jumping around a little bit. I'm trying to be good today. I wanted today to be a good webinar. I felt like I woke up a little bit today. If the pattern 4 is going to do what we expect it to do, try to take a long trade there. Pattern 4s tend to be trend reversal signals. All right. If it's at a VWAP, if it's at a Bollinger Band, if the RSI shows divergence, all the more better if those things exist. But if you want to try, cut your risk in half and give it a shot. So your stop would be there. Keep this on your screen. Move it over to the next signal. And now if you want to try that pattern 1 below the moving average, put your stop right here. You with me? You have taught me, all of you have taught me that the most important muscle we have to exercise, the most important muscle we can exercise is risk control. Risk control. Control your risk. So what I'm drawing on the chart is a Fibonacci retracement. And I have different templates set up where mine is a third, which I use in my force course, and I can go back to a 50% and extend the lines forward to the right. So it's a Fibonacci retracement that I've customized to 0, 50, and 100. And that lets me come in here and pull that up. So if you want to adjust the levels, open up your fib retracement, double click on your anchor line, and then Bala, you can add or subtract whatever levels you want. Make them whatever color and thickness you desire. And here it's a 1 pixel with a white dotted line. And then you can save that template as your default or 50%. I have one that's set for thirds too. Yeah, this is a horizontal split, only 50%. So that's a way you can trade with counter trend. And then Bala, if you want to use what I told you earlier, trade the pattern 4 if it breaks through that bottom dot, right? Trade the pattern 4 if it breaks through that circle. Does that make sense, everybody? And the same, right? The same stuff applies to the daily chart. Only on this chart, guys, the settings are a little different. Just so somebody always asks. On here, my look back is a 1, 2, 3, 0. A 1, 2, 3, 0. Trading days with a swing strength of 5. 1230 swing strength 5. So this is not a default setting. I had to work at this one for a little while. And now Bala, look, right? If we use the same thing up here on the ES, we'll apply the same technique, right? There's our dot. We come in here. We load that 50%. So now our risk is just above that line right there. We'll go ahead and make that a little thicker. That's what she said. And we'll go there. So on the daily chart, Bala, you could have shorted the ES, maybe with a micro. I don't know. And now you've had a maximum favorable excursion of $4,500 or $450 in the micro, right? If you wanted to do that. But this was a pattern 5 when people were saying, no, it's going to keep going. No, it's pattern 5. What do pattern 5s do? Look in the book. Most of the time, they do this. It's kind of funny when you learn that language, how relevant it is. It's like learning Spanish or French or German or Chinese, Mandarin, right? Once you're fluent in it, the more fluent you are, right? The less chance of a mistake when you get your egg foo young. I said no mushrooms. No, you didn't. You said extra mushrooms. I got to learn the language. Right. Latin Earl says, et tu, Brute? Mm-hmm. All right. So, in conclusion, Gann was right. JP Morgan was right. Most everybody else posting every other thing to convince you to do everything else is wrong. Or lying, trying to take your money away. And I've spent a lot of time in these Facebook groups trying to post these things. And everyone's a hero after the fact, right? Everyone tells you, hey, I went, here's a good one. They'll always tell you what they just did. Hey, just so you know, VJ wants us to know, Earl. VJ wanted us to know. In Pune Maharashtra Ramalama Ding Dong, he shorted 45.53. That's where his stop was. And that's what his target was. He wanted you to know that. And then I come along and I'm like, hey, here are the times for the rest of the day. And look how many comments I get. And no one pays attention. They never ask me about my chart. And I show the entries and the exits and I tell people where to get in and get out. And no one asks me. Over and over again. I posted this chart on the ES. You see the daily chart here, Bala? Can everybody see what I put in the Facebook page? There's 9,000 members in this group. July 24th at 8 a.m. If it breaks through this high, it's going to come up to here. But it's a pattern 5, and you can see pattern 5. Yeah. And so almost every day I'm posting in these groups and I'm showing people, hey, here's a 60-minute chart with the times for the next 3 days. These are all free to join. I've joined all of them. I post in every one of them every single day. This one, and this one, and this one, and this one, and this one. I post in the stock options and the day trading now. Stocks. because I believe this. I believe it because over and over and over and over and over again, I see this stuff happening. I know how it works. I know how this works. I know how this works. And it's sort of like seeing a car crash right before it happens. You see it in slow motion and you're like, hey, if you don't turn now, we're going to hit that van. I think we're going to miss it. I think we're going to narrowly avoid it because my RSI said so. All right. If you want to look for those groups, they're everywhere. You can just go online and type E-mini or futures, and it'll tell you what all the groups are, and you can just join them. You can just join them. Yeah, so what I want you to remember when you leave here today, when you see things like this pattern 5 here, whoop, wrong one. The moon is telling us, right? When you see things like this signal here, and you know how long this thing has to go, give it a shot. Take a whack at it. Use half the risk. You have a lot of options here today. But all of it is sort of based on this idea of predictive times, which are so much easier to use than any lagging indicator. So much less complicated psychologically. All right, when's the next trade? 17 minutes. I'm going to make an English muffin. I'm going to stretch my legs and walk around. Casinos want you sitting there every second, every minute. They don't want you to know how much time passed. They want you placing bets every minute. Free drinks, beautiful men and women. The markets are the same thing. They want you sitting there staring at every tick, every bar. They use things like volume. They spoof markets now to convince you, your soul, I know this trade is going to work. Boo, 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 boo. Stop filled. Ah! Now you revenge trade. Now you overtrade. You make the brokers rich. You got to figure out when the mailman's coming so you can pull the statement out of there before your spouse finds it. So many ways to not do that if you use time. If you purchase the software, you're going to get it. You're going to learn the setup. I'll send you workspaces and templates. You're going to get training, and there's a discount today. If you hung in here this long, there's actually a discount. But I wanted you to see all of this is based on truthful stuff. I gave you the signal times in advance. I gave you other methods of showing how predictable markets really are. Sort of open source lunar stuff that you can look up and plot yourself if you want. And I hope I've earned a modicon of credibility with you, right? I hope that there's an element of credibility now that you believe what I'm telling you, because I've put all my cards face up on the table. There's literally no way I could have manipulated any of that stuff. The program that we're talking about is called Warp. It is the flagship product of the company. I'm going to put a link to it in your GoToWebinar chat box. The link to get started with Warp is on the very bottom of the page. And if you click that orange Buy Now button, you'll see there's an option for a pro trading room, forgive me. So Colin, who you met here the other week, he has control of it a couple times a week. My partner Ron, who's also a trader and my co-founder, he runs the room with Colin's help. And they show live entries and exits every day from Tuesday, Wednesday, and Thursday, 8 to 12, the New York morning session. If that's something you want, you can add it to your cart here. It's $149 a month if you do 25% off. If that's not something you're interested in, you can go to the checkout box. Also, those of you, you should have seen a notice in your email about a room that I'm running for customers for Force and for Warp. I would love it if you took a look at that email, and if you had any questions, send me a note about it. You can come to that room too. There's our purchase agreement. I want you to look through that, make sure you understand it, and then you're going to have to agree to the terms of that. You're going to have a promo code WARPOFF, WARPOFF, and if you hit apply, WARP takes 500 smackaroonies off of the price. So I'll just write that down here for you. WARPOFF, WARP in Cincinnati, all lowercase, no spaces, LC, no spaces. You're going to get access to the video training archive. If you like these classes, you'll love our micro classes that help new traders get started with the software. We do offer mentoring and training as an additional service. So if you need one-on-one attention, you want us to walk you through it personally, build charts for you, that's always available. This is a lifetime license. There are no additional fees or charges if you change computers, no big deal. And you get 2 computer licenses to work with, one with your desktop or laptop, however you do it. Give one license to your Uncle Merle, your wife, the mailman. I don't care what you do with your second license, it's yours. And these are transferable. So if you want to pass it on to someone once you make your millions, or you're on death's door and you thought you'd have a great time on your way out, leave it in your will for your son or daughter, I don't care. Lifetime license, transferable. You do get the promo code WARPOFF. We have been in business close to 15 years now. When the customers rate us, we average somewhere between, it vacillates between a 4.5 and sort of a 4.7 out of 5. And so real traders with real receipts. We don't edit those reviews. We don't take down the bad ones. We have a 1-star review in there. There's a 3-star review, but most of them are 4 and 5. So that's available to you as well. Oh, also free installation, white glove installation. We'll log on to your computer one-on-one and install the software and make sure everything is copacetic and running smoothly, so you don't have any issues. When you get started, most people don't read the instructions. Earl's review says 0 shenanigans. So Earl is a 5-star review and he says 0 shenanigans. Thank you, Earl. So that's available, free installation. We also have a Skype group, getting up in the hundreds of people now that are sharing their results and their hopes and dreams with each other in real time. If we look over here, you can see BTTFT community. Whoa, there's a lot of stuff on the screen. These guys are in there posting their results, sharing their successes with each other, looking at each other's charts, sharing their screens, and demonstrating their methods with each other. So we do have a community of users that's active now. It's taken a long time to get you guys to talk to each other, but it's working really well. So that's included with your purchase as well. So warp off, 500 off, all sorts of wonderful things, and you'll get access to the good stuff. Whether you're trading cryptocurrencies, futures, forex, stocks and options, commodities, bonds, oil, gold, silver, platinum, Michael Jordan sneaker futures, Dogecoin, whatever you have access to data for through Ninjatrader, you can see the upcoming times and know in advance when to trade them. Oh, I would love to be part of your team. I'm good at it. We're good at it. We've spent countless hours with thousands of traders that are doing really well. And I would love to make sure when you go out there every morning, every evening, whenever you trade, that you've got a program with over 12,000 lines of code telling you when the bombs are about to drop, where the landmines are before you hit them accidentally, tell you when the biggest opportunities are every day so you don't miss the big trade and wonder why you were in the wrong side. Ultimately, I believe markets are rigged. They have been for 150 years. The Federal Reserve, the Fed chairman, quantitative easing, from Greenspan up through Powell and everybody in between, before and after. It's just one giant international casino. They know what they're going to do in advance. They know what the outcomes are of these ginormous world events. They're all in on it. They're all Bilderbergering or running around in the woods in the West Coast somewhere, or meeting in a secret location in some Roman underground catacomb. I don't know what they do, but I can track their behavior patterns. I can project them forward for you on a 9-second E-mini NASDAQ chart, on a 4-hour GE chart, penny stocks up through Tesla, Meta, Apple, Nvidia, and AMD. If you would like to know what times to expect big moves, I can help you with that, 100%. I love you. I appreciate you guys hanging out with us. Thank you guys. Thank you ladies for coming this week. I'm going to be here next week too. I hope you learned something today. I try to make these webinars a combination of education and enlightenment, entertainment mixed in there, a couple laughs. Trading is boring and lonely. If you want to be a part of something where people are having fun and enjoying what they do while they do it, you'd be hard pressed to find a better group of souls than the customers we have. May the wind be at your back. May the golden sun shine down on your handsome faces. May the valleys of adversity rise up to meet you as you move forward. May the mountains, the obstacles before you lay down as you pursue peace and prosperity, fellowship and health. I wish all those things for you. I agree with you today that they're yours. We want them for you. We would love to be an asset as you move forward into that today. You guys have a great day. Good luck trading tomorrow. If you have any questions, you can get back in touch with me. If you're new here today, Dave will be reaching out to you, give you a little more information about how you can get started. Happy to answer any questions you have. The market you trade is not random. These moves can be known and are known minutes, hours, days, weeks in advance. You can have access to them. And if you don't want to know those times, are you really trading or are you maybe gambling? In which case, it's okay to stop for a while and figure out which one you're doing. It's okay. I love you guys. I'll see you next week. Take care, be well, and let me know if you need any help. Bye-bye.